what could get complicated is about labor distribution. DCAA also requires the government contractor to have a proper timekeeping control and do the labor distribution. So labor is typically the largest cost category for service-based government contractors. And from our experience, many small government contractors, they are service-based. And it is also one of the most heavily scrutinized area during a DCAA audit. So here we have a flow of a proper timekeeping and labor distribution process that DCAA expects. So just we are just sharing some concepts here. So generally speaking, the first step is employee need to enter their time on a daily basis. And this includes all of their time, either the time they directly support a contract or any indirect labor hours, which could be, say, a paid time off or a sick leave, or even a G&A, general administrative time that they spend attending an internal meeting. And after the employee enter their time, the supervisor will need to review and then approve the time entries. And after time entries are all approved, now we come to a pretty important step, which is labor distribution. So the labor or wages costs will need to be distributed based on how employees actually spend their time. So we have a quick example here. Let's say if an employee's salary for a certain period is $100. This is definitely a little low, but we just wanted to show a quick example here. And the employee entered the time as 40% to support project A directly, 40% to support project B directly, and 20% of the time is the G&A time that they spend to write an internal procedure or attend an internal meeting. And those costs, the wages of $100 will need to be allocated to different cost pools based on the time entry, which in our case will be $40 listed as a direct labor expense charged to project A, and $40 as direct labor expense charged to project B, and then $20 charged to G&A labor expense, which will be temporarily stored in an indirect class column, which we just showed. And all of those allocations will be flowed into your accounting record and financial reports. And then after all the direct and indirect costs are separated, direct costs are allocated to contracts. The DCAA also requires indirect costs to be properly allocated to the contracts. DCAA requires the allocation method to be consistent and logical. So for most government contractors, they would use direct labor or direct expense as the driver of the allocation. So on the left-hand side, you can see that it is a profit and loss by class report that we just showed with revenue, direct labor allocated to project, where indirect expenses temporarily stored in an indirect class column. And then we are going to allocate this indirect expense based on the direct labor percentage of each contract divided by the total direct labor percentage, and allocate those indirect expenses to each contract. And in this way, we believe it will show each contract is bearing a fair share of indirect expenses that the company incurred during the operation of the business. And after that, you can see this also shows a true picture of each contract's performance. So for contract number 1, you can see that after allocating indirect expenses, it is actually doing pretty good. It has a net profit margin for 18.5%, while contract 2 is pretty much break even. So like these reports can not only be used for compliance purpose, it is also a pretty powerful tool for management to evaluate the performance of each contract and also possibly adjusting the bidding strategy for future contracts. For example, project number 2, it is currently break even, then the company may think about, okay, in our next bid, we probably need to increase the indirect rate charged to possibly make more profit.